as we try and parse this data in particular here in the United States, what do you make of it? What does the US economy, the global growth story mean for you?
Well, everyone, it's not what happens, it's what's priced in. I think that really matters. I think Warren Buffett said that when you make money on investment, it's when you buy it. And so I think people really need to be cognizant of the fact that growth is very much priced in corporates, especially in the United States, corporate America, whether it's credit spreads being at all-time tight levels or equities near all-time highs. Having pullbacks like today is, par for the course, especially when growth is so expected.
Absolutely. I mean, and, look, Nancy, though, when we've seen drawdowns like this in the past year, usually we've seen a lot of people come in, buy this dip, and this reverses course. And obviously, time will tell as we get deeper into the afternoon and into tomorrow whether those dip buyers come in. With regards to the longer term story, though, and whether or not there is sort of that growth trajectory that a lot of people had priced in the first 6 months of the year, whether that materializes in the latter 6 months, that seems to be the question hanging over a lot of people's heads right now.
Yeah, the Michigan numbers on Friday were atrocious. I mean, absolutely atrocious. And so I think it was a sign that maybe the U.S. consumer is not as strong as people think. Maybe there is more price sensitivity where, at some point they decide, hey, we're not going to be, doing that renovation, or maybe we're not going to be buying that new computer or new car. And so I think, investors just really need to be aware that so much growth is priced in, and it's really a question of being able to continue to deliver on that earnings per share, and whether these multiples are warranted or whether things are pretty expensive.
And are they? Can you answer that for us?
I don't have a crystal ball. I do think corporates, whether it's corporate equity or corporate credit, is priced for a lot of growth. And I think the question is whether that growth is going to materialize, or, the big thing I worry about is whether we're going to have an environment where we see higher prices, but not necessarily the growth that people are expecting. And to me, what's going on right now could be, I don't want to use the bad word of stagflation, but if you think about, when we last had stagflation, it was because of the oil embargo. Now it's a different problem, right? We're not having oil prices shock the market, but we are having higher labor costs because it's hard to get some workers in certain industries to come back. There is higher prices on many consumers' plates. And I think the question of whether is it the same story, but with a different underwire now being labor, the global chip crisis, supply shortages around the world with shipping and transportation because of the pandemic. And will that actually potentially cause that type of environment again?
I mean, you spell out all the worries, this wall of worry that the market's trying to fight through, and has been very effectively. Like, what was it, the 49th record high for the S&P 500, Nancy? What's the sentiment like of your investors? Do they want to be getting into this market? Do they want to keep buying this dip, or do they want to find protection?
So a lot of our investors use the IVOL ETF as a way of diversifying, a way of having, something other than just stocks and bonds with credit spread risks. So I think a lot of our investors are not necessarily sure if the growth story is going to continue or not continue, but they really like that, at least historically, the fund's been kind of not correlated to most things, not really correlated to credit, not really correlated to stocks. It's not even correlated historically to gold or VIX or other things. So I think a lot of people are just sort of like trying to find those non-correlated assets. And I'd say, most investors, they want to have some type of inflation in their portfolio, just because we do live in a real world. And, if you don't own inflation in your financial portfolio, you're kind of short it, right? Because we do have costs, especially those on a fixed income who might not benefit from wage inflation because they're not working anymore. Inflation is that thief in the night.